Welcome to another episode of the EcommOps podcast. Dayu and myself, Simon, we are here in the cross-border e-commerce industry for over a decade, and each one of us had our own little journey. But we always try to do the same thing, is create operational efficiency. That's been our driver, and we do this by actually having active conversations with clients, with players in the industry, and this is why we have this podcast, the EcommOps podcast. Recently, in the US, announced upcoming changes to protect the borders of goods coming from China into the US. Why is this happening? How can you prepare for this? And what will be the impact of that? This is something we're going to discuss on this episode. We've been researching a lot about what is the real impact of the recent announcements about the Minimis. And this is something that is not very clear yet. It's still a little bit vague, but we've kind of run a different kind of options of what the scenarios would be if there's going to be changes. So we're currently in the second half of October 2024. It can still go multiple ways, but can you share a bit more details, Dayu, about what are the details of the recent announcements itself?
So Simon, let me first provide a little bit of context of how it works right now. So as of later in October 2024, there currently is a policy called the de minimis policy, where it means that if you're sending parcels or really any kind of packages importing into the United States, if you declare the value, and that's import value, under $800 per individual parcel, then it gets through customs scot-free. $800 scot-free. And not only does it get through scot-free in terms of no duties, but it actually just fast tracks through the customs declaration process completely. And the reason for it is efficiency. Currently, really no efficient way for customs border control in the US to evaluate every single parcel, especially if a parcel is valued at, let's say, $5 or $2, which is very common if you're shipping D2C parcels from, say, China or anywhere around the world into the US. So this is technically a little bit of a loophole, that if you're shipping parcels from China, for example, to the US, then you don't have to worry about import taxes at all. You still have to worry about sales taxes, but that's separate, but you don't have to worry about import taxes, and it gets very efficiently through the border. Now, what happened was, and this was as of mid-September 2024, the Biden-Harris administration, the current administration in power in the US as of October, that may change. They announced new policy actions they call protecting American consumers. And by cracking down on these de minimis shipments and protecting businesses' wealth, and also protecting against what they call unsafe and unfairly traded products. And by the way, we have the actual White House briefing that we'll link below, so make sure to check that out as well. And one thing that I do want to emphasize is, like, we've all seen this through social media, through even just Googling. There is a lot of information and usually misinformation out there. There's a lot of reading between the lines and reading between those lines, and a lot of discussions around, oh, this is going to kill my business. Like, this is going to completely kill the ability to ship parcels from China efficiently. And I want first to emphasize to everyone, don't listen to all the noise, okay? Go to the actual source. And as of now, the only true source that we have is the actual White House announcement, related articles based on that. So be very, very careful. Do not read too much into articles that are based off of other articles of opinions. On Reddit, for example, like a lot of like e-com pros are going to go crazy. They're saying, oh, my business is going to go down because of this. It may be true. And we'll talk about when that might actually be true. However, focus on the actual data itself, and that's going to be the fact sheet that we link below. And we're also going to talk about some tools you can use to actually quantify your potential impact.
It sounds like there is a lot of speculation. There is a lot of speculation. It doesn't sound like it. There is a lot of speculation of what the impact would be. Everything's blown up because it's news, right? Everyone wants to get eyeballs on it. And this is kind of like creating a momentum to be able to get eyeballs on their news channel or on their whatever channel they're using to promote themselves. But the impact is still a little bit unknown, but there are things that you can prepare for, because there is something's going to happen. There's going to be changes. There are going to be more stricter requirements. Otherwise, they will not announce it. It's not not going to happen, but the impact might be less than a lot of people were expecting. But can you say a little bit more on how a brand owner that is shipping from China to the US can prepare for this, what's coming?
Yes, definitely. And it really depends on what your business is. If you're a true brand owner, I don't think you should be worried. But let me get to that. Let me actually talk a little bit about, like, at least reading the actual announcement, what this is actually targeting. In the announcement itself, they talk about protecting against fentanyl shipments. And by the way, they mentioned that is because actually there have been some businesses, illegitimate businesses, abusing this policy in order to fast track illegal or counterfeit goods through customs. So it's not even just about customs duties. I mean, fentanyl. Okay, so if you're shipping fentanyl from China into the US, then yes, this affects you. And your business deserves to die. Okay? If you're shipping counterfeit goods. Okay? Now, on the other hand, if you are a true brand owner, if you own your IP, if you are utilizing China shipping in the right way, I think more clear and obvious policies that's going to change is that there's going to be more scrutiny in how you actually declare your good. Those who are familiar with freight, I'm sure you know about HS or HTS codes. So going forward, I think one almost more certain thing is that there's going to be a lot more scrutiny. So if you're selling shoes, declare shoes. Don't sell fentanyl. Don't declare fentanyl as shoes, right? That is at the core one of the things they're trying to do. So one important thing to prepare is to make sure that, first of all, work with a China fulfillment company or 3PL that understands and works with couriers who properly declare the goods. It's not about value. It's not about taxes at this first part. If you're selling something, make sure that you're using the correct HS code for it. And this is where it gets a little bit muddy, because there are going to be certain situations where even for a so-called legitimate brand owner, they work with their couriers to misdeclare their goods to get it through customs. So, for example, you're not supposed to send supplements from China into the US. Now, some fulfillment centers will say, we can do that. And you know how they do that is because they don't declare supplements. They declare supplements as, I don't know what they declare it as, but just something else, right? So don't do that, right? Make sure that you don't sell illegal products. Make sure that you are declaring or using the correct HS codes and working with a fulfillment center and courier who actually understands how to do that for you. And now, if you are a legitimate brand owner that's not relying on all those things, I really think that over the long run, even if all these rulings pass, I think it's a net positive for legitimate brand owners, because that just naturally starts to filter out a lot of the bad actors, which means that more opportunity for you to compete as someone who's doing it legitimately.
Yeah, we got an update from our logistics providers as well about this. It was much less about actually the value declaration. It's much more about the tariff code, the HS code, the HST code, whatever you call it. Because to that number, there is obviously an import rate, an import percentage connected, which translates into a certain fee. But what was more important was actually the product description. Clothing is not okay. It has to be women's clothing or men's clothing or specific trousers, pants, whatever the wording you use, but preferably even with the brand name in front of that object. If you would have Nike shorts, I don't think it will pass. They will filter out these kind of global brand names and say like, oh, this cannot work. But there is a requirement for you to add more information to the description. And that is also the instructions you should be giving to the people shipping it out, especially if you are a legitimate brand. Why not? You want it to go through smoothly without any obstacles and issues. And that's something that with logistic companies, some logistic service providers, they're receiving parcels that are already packed. The only thing they know what's inside is whatever the data is given to them. So if their client would say their shoes inside and their supplements inside, they can obviously feel that difference if they're actually touching it. But most of the time they're not touching it because there's a lot of automation in the handling. It will require them maybe, cannot be, the weight doesn't make sense for supplements. So they have to build in logic to be able to identify these gaps. But it comes really with knowing what's truthfully inside the parcel and the person taking ownership that is putting it in of the quality of that data. And that data compliancy is currently what it seems like the US is at. It's not about the value of the parcels, although the value goes in, they might be underdeclared, but it's not the issue right now. The first step is making sure that what's really inside is being recorded properly, accurately. And with that recording, it comes with an HS code, HST code, that then translates into a tariff, a tax.
Yeah, and you mentioned apparel and textiles as well. So one of the things, at least what the announcement is saying, is it is protecting against some of the questionable labor practices that do happen in China around textile production. There is, and this is probably not the scope of our discussion right now, but look into it. There are some questionable labor practices with textiles, and it is specifically they're also targeting like Shein. The hypothesis that they have, I assume, is that Shein is actually engaged, or at least part of the supply chain actually utilizes some of these textiles that has regulations against. Now, no one exactly certain, but that's the kind of thing that they're targeting. And part of this is also, by the way, I mean, I don't like to talk about politics, but this is also very political as well. This announcement was made 2 months before the US elections. And by the way, so this is Biden and Harris. Trump, the other side, actually, they're proposing much more extreme measures. They're proposing not only the elimination of the de minimis, but also adding tariffs up to 60%, 50, 60%. So in the grand scheme of things, this is actually more mild, right? So from a political standpoint, I don't want to go too deep into this, this is partly Biden and Harris kind of showing that they also care. They also care about this idea of protecting against China. And also, like, okay, why are they targeting Shein, right? Kind of similar to like why they're targeting TikTok as well. This idea of like, hey, like it's obvious. TikTok is obvious. Shein is obvious. So they're kind of like representations of what China is supposed to mean to the consumer, right? So a lot of this is political. That being said, there are questionable textile labor practices that are happening in China. And I think that as an American, by the way, I'm an American citizen, right? And I was born in China, but I also do not agree with any questionable labor practices anywhere. So I think that actually should be controlled, right? If you're doing something illegitimate, then you should be impacted by this ruling. Now, let's shift a little bit to what are the actual quantifiable economic impacts to a brand owner. Something that I've said over the years is do not build your business model depending on any kind of tax or duty loopholes. Okay, I emphasize that. Now, especially years ago, there were always some leeway, some gray areas, some loopholes when you ship parcels directly from China into global markets. Simply because like 20 years ago, 10 years ago, it was just not a thing. Like customs and border control, duty control just didn't really kind of consider parcel shipment D2C could be so big. Now, obviously, that changed with the rise of things like dropshipping, AliExpress, 10 years ago. And there were some gray areas, some loopholes that e-commerce brands could fairly abuse. When I say fairly abuse, because, well, that's the point of loopholes, right? It's legal to technically abuse it. What's happening right now is actually quite similar to the policies in the EU years ago and how that has been patched up. So around EU VAT collection. So previously, there was actually an exemption that if you declare your parcel sending to the EU under, I think it was 22 euros or so, then it completely skips VAT. And since then, that's closed. So, Simon, you're based in the Netherlands. You're European. So maybe you could talk a little bit more about the history of that and maybe impact you as a consumer as well.
Yeah, it didn't just skip the VAT up to 22 euros, but also the import duties. And I think what the main difference with the discussion in the US, so there's similarities, there are differences. Let's start with the difference. Difference is that in the EU, it is about VAT. It's about actually the import and sales tax. In the US, it's about the tariffs. It's about the import duties. It is a very different nuance. That is the main difference, I would say. What happened in the US, this was July 2021, where they changed, there was a sort of like a de minimis, like a 22 euro instead of 800 US dollars, 22 euro was brought back to zero. So all that means that all the parcels that were entering into the EU, and still is the case, are being taxed. And these are import tax. The complexity in Europe is that each country in the EU has different tax percentages. They're using their country VAT percentage. So that brings in some complexity. That makes it very hard when parcels are all arriving in one batch into, let's say, the Netherlands, and then distributed from the Netherlands to the final destination. Which percentage should I use if it's entering in the Netherlands and it's going to Germany or Scandinavia or other countries? So that brings much more complex situation with it. But the key reason why in Europe it was implemented is also very different from why it's implemented in the US. In Europe, it was implemented because the EU was missing out, particularly on what was being sold on main platforms. And these was US platforms. It was against Amazon. It was against eBay, because there were sellers on there that were not paying any sales tax at all. That was the big one where they've been missing out. Obviously, AliExpress is one of them. So they had a really much targeted to platforms. The EU still very much targeted to making sure at the checkout of each platform selling into EU, they are liable by law to collect the sales tax for everything that's coming out of the EU into the EU as a B2C shipment. For the US, what Dayu also earlier mentioned, it is to protect the consumers on the quality and the safety and the origin of the goods. That is a very important difference as well. For the EU, it's been solved in a way that you have to use an IOSS number, an import number, and provide that data, provide that number for each parcel entering the EU. And then, therefore, if you use that and it's linked to your company, you don't pay any import tax, but you do have to prove that you're paying for the sales tax. In the end, it's about the sales tax collection that is super relevant for the EU to be able to avoid missing out on their business model, their income. For the seller itself, not that favorable, obviously, because you will have to pay more taxes. But then again, taxes are a stable thing. It should be something you account for if you build a long-term business and if you want to have a long-term brand in place. Obviously, there's still loopholes, and these loopholes will also exist in the US because it's a process. Not all of the rules will be solved immediately. Not everything will be clear immediately. There's still steps to make in the EU as well. And EU is also looking at what's happening in the US and how can they learn from this and tweak it in a way that they can close the loopholes of sellers being not compliant, trying to get away with not paying taxes, and just creating safety issues for the population.
Yep. And one important distinction is a distinction between sales tax slash VAT, right, versus the import duty. And that's a very big distinction because, and I'm not going to go into like VAT accounting policies, but because the EU is based on VAT, like if previously with that loophole, no one was collecting any taxes at all, or no one was able to collect any taxes at all from a government standpoint. And that's on the retail price, by the way. VAT is always on the retail price, just like how sales tax is on the retail price for the US. That was actually a big problem, right? Because if you're selling something for $50, let's say 20% of that is $10 or 10 euros. 10 euros of VAT that the government is not collecting. Now, for that same 50, let's say dollars now, converted back to dollars, for the US, the product COGS for that product might just be like $3, $5, whatever it might be, right? So then import duty on that is a much lower percentage. Now, the US works different because sales tax is regardless of where you're located, if you have a nexus, if you hit a threshold in a specific state, you have to pay sales tax in that state. So that was already the regulation. There was no loophole around that. So this is something that is a very different problem and very different economics as well. And I'll talk about like the actual potential economic impact. But let's go back to the EU. When the EU enacted the ruling, we work with our clients to do it all legitimately. Right? Now, there was a lot of concern across the community that was shipping from China into the EU, and particularly dropshippers. They were like, hey, my entire net margin is like 20%. If I pay 20% VAT, then that's my margin. So look, if literally your entire margin is based on a tax loophole, or really any kind of loophole, then yes, your business probably does not deserve to survive when that loophole is closed. I mean, that's just a blunt truth, right? And I imagine, so at the time, we weren't really kind of serving traditional dropshippers, but I imagine maybe a lot of dropshippers with generic products with really no branding around it that were depending on, and sometimes even 10%, 15% net margins. Like, sure, their businesses went down because now they had to, quote unquote, pay this VAT, right? But the brands that we served, I mean, actually, we have more European volume than ever after the change. People were used to paying taxes. People are used to paying VAT. People are used to paying sales taxes. Now, if you're selling some generic stuff that someone else is also selling, and they're, like, and they're abusing some loophole to sell it cheaper, then sure. But again, if you're doing something like that, if you're depending on this loophole to even survive, then you really need to rethink if that is a business model that is actually going to work after this ruling. That being said, this new ruling is still a lot less impactful than the EU ruling because the key, it's based on import value.
One quick addition actually to this is in Europe, there's still a limit for import duties. It's 150 euro. So everything under 150 euros, still no import duties, which in the US, they're changing this kind of to zero. So that's, I think, is a very important difference. But also consumer behavior is a very important difference. When I go shopping in the US and I see a price that's $50 and I go to the cash to pay and I get a different price than 50 because I didn't count for the tax. Normally the tax comes afterwards in the US. Well, actually in Europe, you are obliged by law to actually show the full price at checkout, including the sales VAT itself, including the taxes. So consumers are also expecting them when you go to the checkout, you already clicked on buy, that there's not going to be any change in the price. Therefore, there was a very big impact for some of the sellers that trying to not pay tax, and then suddenly what they considered as commission or margin was suddenly became tax. And that also has very much to do with how the consumer prices were displayed by law in the EU, but also in the US. And that create also a much more different consumer experience that you have to account for as a consumer brand.
Okay, so now let's talk about more details about what the cost implication might be on your business. So if you're potentially impacted by this, if you're a brand shipping parcels from China and you haven't organized freight before, if you organize freight, you'll know this, but know what your HS code or HTS code is. And then there's actually official tools, and we'll link to it below as well, that allow you to search for your HS codes. So we're going to share two links below. So actually, they're actually on the same website, but the links also have queries already preset on an example HS code. So one of the things that we've been involved in a lot recently is just skincare, beauty, and hair products. The first link I'm going to have is an example query of a HS code that's based on the family of 3305. So that's hair products, essentially. And please check out the link below to actually see what I'm talking about. And you'll actually note that in this, what you want to actually look at first is the rate of duty. And in this column, it says the general rate of duty is free. No. So it's a little bit more nuanced than that. In this tool, and please check it out, there's a little mouse over of one like next to the free, kind of like a subscript, but it's not really a subscript. And it says C code 9903.88.03. And again, we'll have the links with the actual query codes below as well. So looking at that code, you'll see that there is a whole section around additional tariffs for products from China. So this is part of what the announcement is talking about. Over the years, the US administration has set additional tariffs on specific products from China. And it's actually not insignificant. It's a lot of products, but we can't tell you unless you look at your product. So if your product, even if it says duty free, has this subscript to it, then you'll see if you look at this code 9903.88.03, you're going to see that on top of the duty, you have to add 25% tariff. Okay, so be very clear what your product's duties are, and also if it falls into this umbrella of additional tariffs. And by the way, this additional tariffs is supposedly part of the goal of this new announcement that supposedly the worst case scenario is that your product, if it's on this tariff list, you're going to have to pay this tariff or any kind of duties. Okay. That being said, let's actually evaluate the cost. I mean, we have a lot of skincare clients. So in skincare or beauty in general, like quite frankly, your product COGS are going to be in the dollars range. Let's just say like, $2 declared value, right? So you add 25% tariff on that. Okay, that's a 50-cent tariff. I mean, this is a whole different economic calculation than sales tax or VAT. And that skincare product might be sold for $30. Okay, now if you 20% of $30 is $6. I mean, that's a lot more of an impact. But in the worst case of this scenario, in that specific calculation, a $2 product COGS, you sell it at $30 all in, including shipping, whatever. And okay, your cost can go up by 50 cents. Okay, so that being said, if your product is valued at $100 factory production cost, that's a very different calculation. So do the homework. We'll provide you the links anyways. Figure out what code your product specifically needs to use and just evaluate how much does it affect you, even in the worst case. Now, the reason why I say it's the worst case is because my point of view is that there is a very, very high chance or a very low chance that the worst case is going to happen, at least broadly. And because there's actually been a lot of economic analysis showing that the cost of actually enacting this and actually checking every single parcel, even like something that's declared $2, $3, far outweighs the potential benefits of the duty collection. I mean, just right now, Custom Border Control in the US is already shorthanded. They can't manage what they're doing right now. So imagine them having to then process millions of parcels per day on average declared value of dollars, trying to collect like, 20 cents, 50 cents, $1 each. There's no mechanism for doing that right now. And the economic cost of doing that, again, far outweighs the potential profit. Now, again, I don't want to get into details of politics, but I've been an American citizen for a while. What happens a lot in American politics and global politics, honestly, is that politicians, they have this great idea for a change. And once it gets to the actual experts to operationalize, it's like, wait a minute, this doesn't actually make any sense at all. Okay. I mean, like, I think that there's a very high likelihood that that's actually going to happen. Given the elections coming up, no one exactly knows what's going to happen with the elections. And even after the elections, like it's not even a guess. I know that whoever is going to be president has a lot more to worry about than pushing for the specifics of this. That being said, I do think that part of this, I feel like, is going to be enacted. So the things around more clear declarations, the things that actually protect against illegal goods, counterfeit goods, the things that actually account for abuse. But because this is import value duties and not sales value, not retail value, VAT or sales tax, the actual costs are just really not worth it to actually implement in terms of economic analysis for the US government. So that's just my opinion right now. Things will probably evolve and change. Again, we're filming this podcast in the later half of October. The elections in the US are coming right up. We'll certainly keep everyone updated on any changes there. And who knows, maybe nothing happens. Maybe this fizzles out and it just gets put on hold indefinitely. I think that's a real possibility. If anything changes, follow us, make sure that you follow Simon, you follow our page, and we'll certainly send adjustments and updates along your way if something fundamentally changes.
Yeah, so either way, two things you can prepare is find out what product description is being used for your parcels that are being sent into the US, and also find out what is the HS code that is linked to the product description itself. You can do that homework in the link below. You can also reach out to your supplier or your agent or the fulfillment center that you're using. They should be aware of it because they have to prepare the documents anyways. That's something homework you can do. This is not related to whatever the outcome is going to be on this decision and the implementation of it, but this is something you should be knowing as well as a brand owner itself.
And don't sell fentanyl to the US, please.
I think that's all for this episode. It's been a buzz. They announced the Minimis, and there's a lot of noise out there, as Dayu said. Please get your facts straight. Really go to the core of what the announcement is. The links are there. Basically, these are the 3 links you should check out. Keep following us, making sure you stay up to date. Trying to give it you all the information that we have and have been validated by us as well. We give it to you. Hope you enjoyed this episode. Please do follow the EcommOps podcast. We're also on YouTube, where if you want to see us, you can decide to go on YouTube. Make sure you follow us and make sure that we are just going to help you scale your global D2C brand, because that's our aim. We want to help you succeed, share the information, create value so that you can scale globally. See you on the next one.